don't know how to trade the market, or going through a lot of trading emotions, or not able to manage your risk properly, this is the Trading Podcast by your host Himanshu to help you in becoming a great trader. What's good, guys? Welcome to the Trading Podcast. My guest on this podcast is Mark Buckingham, who has been doing really well in trading and made it on the other side of the jungle. He's been trading from last 3 years, and from last 1 year he has been doing really well, and he has seen great success. Throughout this episode, we will cover his trading journey, his success and failures, and important things to keep in mind for new and developing traders, and how you can win in the business of trading. Let's connect with our today's guest. Hi, Mark.
Hey Tom, how you doing?
Mark, things are going really good. Welcome to the podcast. How things are going, man?
Oh, doing really well. Definitely had a good day today, and it's a pleasure to be on the podcast. So I want to thank you again for bringing me on. I'm excited to talk.
Great. It's my pleasure. It's my pleasure, to have you on the podcast, and hopefully, we are going to start a movement. When we were speaking before, starting this podcast, you know, I sensed that you are also having the same vision and same purpose. So, let's jump right into the conversation.
Beautiful. Sounds good to me.
Great. Okay. So, what got you interested in trading, Mark? Like, just take us back to your early days of trading.
Okay. So I started back trading probably right around 2016, and I initially got into it via cryptocurrency. I had a roommate. I was playing poker at the time professionally. He showed me technical analysis and showed me crypto, and I started trying to jump right in, trying to day trade it. I did not find success in it initially. I had to spend a lot of time studying, reading, trial and error, and a lot of research to really figure out where my niche was within trading. Fast forward a couple years of losing and learning, I finally discovered futures trading on the S&P 500, and it was really history ever since.
Yeah, and we will cover some of the points. Like, I'll try to cover, I'll try to go through your whole journey. But that's a pretty interesting point that before trading you were a poker player, right?
Yes, I played professionally for about 4 years.
I see. And I have never played any poker, but there are a lot of similarities, in both of these things. Like, in terms of managing the risk, so far, like, I heard a lot of guys, and the psychology, and the risk management, and just on the taking the chances and probabilities, like, there are a lot of similarities. What do you think?
Absolutely. I think a lot of the skills are transferable because with poker, you're doing constant risk assessment. You're dealing with a lot of math, with a lot of probability, with a lot of different scenarios. And the trick is you got to be able to adapt to the various scenarios, just like the market, right? The market is never the same each day. You got to adapt to kind of how it's doing, adapt your strategy so that you can, maximize your profits on any given day. And so I think it's absolutely, they go hand in hand. If you're good at poker, you could be good at trading as well.
Yeah, and I think that you got an advantage. Like, you played the poker, so you were able to the how you have to play on the probabilities, and how you can take chances, and like, instead of thinking about trading emotionally, you were thinking about it in terms of numbers and chances.
Correct. Correct. I always
Yeah.
try to make everything kind of go back into numbers and probabilities just because that's how my mind works. Just makes it easier for me to understand, I have a 60% chance of winning here. Of course, I'm going to take that position, right? Because it has a high probability of winning and so on. So I think, they just go absolutely hand in hand. And I actually know quite a bit of poker players who are now professional traders as well.
Mm-hmm. Yeah, I mean, and that's a pretty good transition. I think it's although you have to learn the skills, you have to learn the technical skills, and I mean, there are people who are trying to win in trading in different ways. But absolutely, I mean, I have read a lot of books in the past. There was a book by Edward Thorpe. I didn't remember the name, but he talked about the game of probabilities and the similarities. But okay, I mean that's pretty interesting. It's really good to know about you. So just take me back to your first trade, if you have that memory in your mind. Uh, what was your first
I
trade?
do.
Yeah.
So my first trade is going to go back to the cryptocurrency days. And what got me hooked was back then you could throw spaghetti at the wall and it's going to stick. You're going to make money. So my first trade, I forget the exact coin per se, what it was, but I ended up making $10,000 in one day. And it was like a 1,200% return. And I was like, wow, this is so easy. I can definitely do this full time. And shortly after, I lost everything just as quick as I got it. But that memory of it, just money coming in quick and then money going out quick, really stuck with me. And yeah, so and so there was kind of history ever since. I got hooked immediately, almost like if you're at a casino and you go and play at a slot machine and you hit the jackpot within your first $100 or something like that. Well, then you're hooked for life on playing slot machines. You're just reeled in. And so that's exactly what happened to me. I fell in love with it, and history.
Yeah, I mean, I can definitely, understand that situation. Although, if I will go back in my journey, maybe probably like I lost on, some of my initial trades, and but still, I was going, very, strategic, and my approach was a little different. But yeah, I mean that's very interesting. So you got your trade, you got your first trade in the crypto, and you made the money. But then after that, you actually saw the reality. So what was the reality after that? And how was your like first year after that? Yeah, after that first trade, how was your first year?
So I'm not going to sugarcoat it. I got destroyed my first year. I lost everything I put into the market and then some. This was back, we're now getting up to probably right around 2017. But I didn't want to stop trying, so I kept studying technical analysis. I kept reading more books. But eventually, I got a job at Charles Schwab. And when I went to Charles Schwab, I got fully licensed and I actually got on the active trading team. And that's where my trading really started going to the next level, when I started studying things like options, just how to build a normal portfolio, what day trading really was. Because before, I was just kind of clicking buttons. Once I got to Schwab and started talking with a lot of professional traders, kind of seeing what they were doing, and I was placing their trades for them because I was a licensed broker at the time. I got to really learn a lot of the psychology behind it.
I see.
And then from there, it just kind of started transforming. I was an option trader for about a year and a half. I did see really good success there, but I wasn't ever using too much money at the time. And then once I fell into the futures role, that's when money really started flowing in, and I discovered my own personal style of trading, which I think is the way to truly succeed in trading. Is you can't mimic another trader. There's no one size fits all approach. You have to find a style that fits you.
Fits you and your personality, like your
Exactly.
your behavior and your temperament. level, and all of those things. I mean, there are people who can sit, in front of the screen. They can take a trade and they can watch it for the next 3 months, right? And there are,
Mhm.
other guys who, they just cannot hold it over an hour, or maybe, if you look at some of the strategies that are working right now, I mean, market makers, they
Mhm.
are trading for just, seconds. You know, they're trying to find an edge on the bid and, ask, and they're trying to, make profit between that difference. Sometimes.
Exactly. And I would say my style nowadays is that of a market maker. I'm always counter trend trading. So if it's going up, I'm scaling in short. And as it's going back down, I'm scaling in long. And I'm usually only in the position for maybe 1 to 10 minutes. I'm in and out pretty quick, 20, 40 times a day. And that's
Mhm.
what works for me, though. And that's just how I found success. I couldn't hold positions, like you said. I couldn't hold them for a whole day or 2 days. I get too nervous, and
Yeah.
it would drive me a
Yeah.
little crazy. So I had to find a
Yeah.
way.
Yeah, and if you will try to become an investor, most probably it will not work, because that's not something that you'll feel comfortable with. So definitely, and I'll come to the strategy part. Let's let's cover up, when you were in your first or second year, and you got your first trade, you were profitable, and you started to see the challenges. What were some of the challenges? Like, I want, this podcast, I want to make it relatable to, to the new traders. So if you can explain, like, if you can go back a little bit, what were some of the challenging aspects which you were facing at that point of time?
Absolutely. And I can boil it down to two main things that I struggled with initially. And number one,
Hmm.
it was FOMO, or fear of missing out. I would be
So you were
watching the
chasing.
market. Correct. I was trading. I'd be looking at the markets, and it would start going up. And I'd be like, "Oh no, I didn't. My order didn't fill. Is it just going to keep going up? Is it going to go back down?" Well, I would end up moving my order and chasing the price as it moves up, only to know that I'm buying the top, and then it reverses, and I end up losing the trade. Right. So dealing with my
That's the first
emotions,
lesson.
that was
That's the first
trying to
lesson.
handle those emotions. Oh yeah, that's the hardest thing. Also, I would say that is one of the hardest things to master is being able to handle your emotions when you're winning and when you're losing.
Yeah.
The
And
other,
just your second one.
the other lesson I was going to say is bankroll management. If you have, as Jeff said, I'm just going to use arbitrage numbers. If you have a $10,000 bankroll and you're putting $10,000 in one trade and you lose, well, it's going to be detrimental to your bankroll right then. And that's kind of stuff I was doing back then. I was going all in, and only to be margin called, only to just get crushed in the trade and whatnot. So it's when I really
That's crazy.
started to develop an actual bankroll management and having set rules on how much I wanted to enter in, how much I really wanted to risk of my bankroll in any given trade. That's also crucial or paramount, I think, to success.
So you are talking about the risk management, right? You're
Correct.
saying that, before taking any trade, every single trader out there, they should know exactly, how much they are going to risk per trade, and how much, if they will lose, will they be comfortable with that loss, and will they be able to, like, move on to the next trade, and they still have that, psychological comfort, right?
Exactly. Exactly. You got to have a plan, right? You got to know what you want to do so that if something bad happens, you're not just, up a creek without a paddle. You know what you're going to do. You can move on and you can make that next trade and not dwell on the past.
Okay, so just chasing the stocks, and not having your risk in check. These were some of the biggest challenges and the mistakes that you faced. Okay, I mean, those are really great lessons. And of course, when you figured out, you were having your breakthrough,
hmm I knew when I was having a breakthrough, when I don't even know how to put it into words. Things just kind of started to click. Like I was tired. I guess I got to the point where I was fed up. I was tired of making mistakes. I was tired of losing all the time. I wanted to find ways to win. And so I had to sit back and kind of analyze what I was doing, screenshotting my trades, going back and analyzing them, figuring out, okay, why did I do that to begin with? And then I started journaling a little bit and writing my thoughts down while I was actually placing the trades. And then I would review those journals at the end of the day, right before bed. And that's what really made me realize what the mistakes were that I was making so that I could then go back and fix them.
Okay. And so it's another important lesson that if you are a new trader, if you're just starting out, then you should be writing things down. You should be checking things. You should be keeping your eyes on what's happening, what's not, what's working, and the things and the strategies which are not working. Then you should take them out and just keep improving what's working.
Exactly. One thing that I also struggled with at the time is I was switching what I was trading and how I was trading all the time. I didn't have a one style that I really wanted to maximize on. I'd say, oh, this one didn't work today, so I got to try something completely different the next day. And as you keep tinkering, you're never really getting to the point where you're figuring out what you're doing wrong because you're changing all the variables every single day. So it just leads to mass confusion, and you end up kind of going down a dark hole where you just consistently lose and you can't figure out why.
Yeah, I mean that's a really important point, and it is very very important for a new trader that first of all, they should not take one trade or two trades and just start to see that you are becoming successful. You have to let your strategy work over 10, 20, 30, 50 trades, and then you can have a clear direction whether that strategy is going to be profitable or not. Just changing the
I agree with
strategy
that 100%.
on a day-to-day basis. Yeah, just changing the strategies on a day-to-day basis. It's not a good idea, and that's one of the reasons. Like it can create a lot of confusion.
Exactly. And
Mhm.
so I think the way to do it is you want to have one style, and if something's not working, take out one thing, add in one thing, and that way you're only taking out one variable at a time, and it really boils it down a lot simpler for you to figure out, okay, what mistake am I making? And then I want to add, you mentioned, 30, 40, 50 trades. That's when you can kind of start seeing if your style works. And I tell new traders all the time, sometimes you can trade terribly and get rewarded for it. So don't let the confidence build because you had 1, 2, 3, 4 good trades in a row. They may have not been good. You may have been doing something really bad, but you got rewarded for it anyway because the market sometimes has a mind of its own. So I like that idea you just said of you need a sample size of trades to really determine if you're good or not.
So true. I mean, that makes a lot of sense, and hopefully some of our listeners, they will pick up some of these ideas. Let's let's move on a little bit, and let's take a look at how you are trading today, and what's your approach, or your method. What's your ideal
Sure.
setup? Yeah, yeah. What's your entry and exit look like?
Okay. Absolutely. So as I mentioned a little bit earlier, my style is somewhat like a market maker per se. I'm a counter trend scalper. So when the price goes down, I'm looking for areas to buy and go long. As the price goes up, I'm looking for areas to short or sell. And I use a very quick chart. I use a 17 tick chart. And for all the new listeners
Mhm.
out there, a tick is just the equivalent of a transaction. So every 17 transactions that go through, it draws a new candle for you on the chart. And I do that because I don't like having time a part of the equation. And it just makes it a little bit more simpler for me. It makes me kind of ignore the noise or just kind of ignore one more variable. I'm really just more focused on price. Now, as far as technical analysis goes, I keep it simple. I use just a couple of Keltner channels at various different standard deviations. And what a Keltner channel is, for everyone that's listening, it's the equivalent of a Bollinger Band, but really what it does is it helps you visually see where the price has overextended, either sold too much or bought too much, and you're using it to find an area to revert back to the mean or get back to the average price. And so I'm using a very quick chart, like I said, and I'm going in and out, 20 to 40 times a day, because that type of style just works best for me. And I like just to keep it literally as simple as possible, with at least the minimum number of indicators I can have. And then I also stare all day at the DOM, the DOM. And what that is literally where you see all the orders actually go through. So all the bids, all the asks, and I can gauge where the momentum is shifting to then start counter trending that move.
Okay, that's that's really really interesting. And let me just simplify it a little bit more for the listeners. So you are looking for extended moves, right? And as you said, you are only trading in S&P 500, right? And then after that, for taking entries, you are studying the what you call it DOM, and you are taking a look at the order flow, and with the help of that, you are entering into your trades, like, and at the same time you are trying to avoid any kind of indicators. And that's really interesting. What's your take, Mark, on indicators? Like, it's a very interesting topic to have a conversation here.
That's a great question, Tom. So I originally, when I got into trading, technical analysis is what brought me into trading. I love all the indicators. My go-to indicator back in the day was the Ichimoku cloud.
I see.
I loved it. And I used to use all the different moving averages and whatnot. And what ended up happening, though, is you can fall into what's called analysis paralysis. If you have too many indicators going on at one time, it can deter you from making a quick decision. So for me, having too many indicators on the screen was making me trade worse. So I needed to find a way to simplify it.
Yeah, and I mean, when I was trading, of course, I was also going through the same situation that you will look at a lot of indicators. You have RSI, you have stochastic, you have Ichimoku, you have Bollinger Bands, you have moving averages, right? And I mean, the screen looked pretty well, screen looked pretty well. If somebody will look from outside, at my setup, they will say, this is looking really good. Are you doing some kind of research? And I was like, no, this is, I'm trading into the market. So it is very intriguing.
Oh yeah. It makes you look important the more indicators you have on the screen, right?
Yes, so true. So true. So I mean, and but just after doing a little bit of work, you figure that out very quickly. That this is not something you should be looking at, or you should be looking at very few, maybe one indicator or something, just to get a little bit of idea. Yeah, otherwise it's only confusing. Just you cannot even you are not at some point of time you will stop looking at the price, and you'll be looking at the indicator only. All the indicators, and I mean that was so confusing for me. So I mean that's a very interesting point, that you have to be very careful, and you have to design a strategy. And if you see that a particular indicator
Thomas,
You can.
it went silent again.
Can you hear me, Mark?
Okay, yes, you came back. There's a little bit of static, but you're back now. I can hear you.
Okay. Okay. This is my first podcast, and I will try to solve all the problems. But coming back to the conversation, for for a new upcoming trader, what they should expect from the market in terms of getting returns. That's one thing which is very interesting to me. That when people will come, if a new trader is coming into the market, they are thinking on a different level that they can make a lot of money, and it is going to be really great. So what's your take on that point, that what will be a good, let's say, the thinking pattern, or what should be the expectation for a new upcoming trader? Is it like, we just have to, first of all, we don't have to lose money, or they should start expecting that they can make money from day one?
That's a great question, Tom, and I'm glad you brought that up, because what a common theme that I see is people think they can get rich quick from trading. They think they can put a little money in, they're going to get a huge return, and then they're going to think that's repeatable. What I like to tell new traders is good trading is not sexy. It's not sexy at all. It's actually kind of boring, good trading, right? Because you got to be strict. You got to be disciplined in order to consistently make good decisions in good trades. If you're wagering too much, you get too emotional. If you're wagering too little, you may get emotional as well. So I think the stuff that you see on social media where people say you can make 1,000% return on your portfolio in a year is unlikely and not realistic. I think it's very doable to make 1 to 2% of your portfolio per day doing very disciplined trading. I think that's a realistic approach that new traders need to get into their mind, is you're more than likely not going to get rich. You might be able to, but the chances are slim. So I think their mindset going in needs to be, hey, I'm doing this just to build, to grow. I'm not trying to get rich. I'm looking at more of a long-term approach. So yeah, 1 to 2% a day, I think, is realistic. And then the goal for a new trader should be to have the cheapest trading education you can have. The more you lose initially, the more expensive your education is. So you want to focus on minimizing that cost.
Yeah, and that's a really great point. This is one of the reasons that I'm starting this podcast, is that you need to understand this, for a new trader, that if you are coming into the market, first of all, if you can set up a goal of not losing money for the initial 6 months, I mean, you are on a good path. You are moving towards towards profitability, you know, and it's a very horrible idea through social media or on YouTube, and people showing a lot of stuff like cars and mansions and everything, and yeah, so this is really bad, and people just don't get it until they will not get hit hard by market. They will not learn this lesson. So it is very important that you need to have realistic expectations from the market, and hopefully listeners, uh, you know if they will get this point, it is going to be really great, and it can help them tremendously. And as you said, I mean, that is a really great point. You can learn with the help of a successful trader. Of course, you have to do your due diligence in order to figure out whether the person is actually profitable or not. You know, but besides that, if you are coming into the trading and you are in that they can make it, you know, in the very first month, and they don't even understand the market at that point of time, that's a big problem. And as you said, it is going to be a very expensive education, you know. So
Oh
don't.
yeah, and I've seen it a lot.
Hmm. Yeah, and
I,
this is really important. Go
oh
ahead,
yeah,
go ahead.
I had a roommate. I had a roommate. The roommate that got me into trading initially, back when we were in our crypto days. One day, he had a lot of money to start with, right? And so he thought that he should be wagering a lot of money. And he made one day $100,000 in one day. And he thought that that would be repeatable. And what ended up
Yeah,
happening, he lost the entire 100,000 within the next week. And that's how expensive his education was. Just a giant sum of money that came easily and went just as fast. So, yeah, you got to get the idea out of your head that you're going to get rich quick. And I just like saying, good trading is not sexy.
I mean, it looks that we are just joking on that point, but it is one of the most important points, that it is actually boring. And why it is boring? Because you are just sitting back and you are just waiting for your setup. You are waiting for that one moment when you will see the situation working in your favor, and you will jump in, take the benefit of the opportunity. If it is working in your favor, that is really great. If it's not, then you just cut out your loss and move on to your next trade.
Exactly. Yeah. Don't dwell. Just be able to move on. The more you dwell, the more you beat yourself up, the more fear you create in your mind, and the more higher probability that you're going to make a bad decision going in the future.
Yeah, and as you said in the starting, your emotions, they will interfere in your trading process, in your if if you are not, and if a new trader, if they are not thinking clearly, then if even if they have a good strategy in the place, they will not be able to execute on that.
Exactly. You got to be thinking clear. You got to have a clear head. I even try to limit the amount of caffeine I drink in a day, because you don't want to be too jittery. You don't want to be too excited. You got to stay level-headed all the time, and you got to lose the fear. You can't have fear if you're going to be any type of trader or investor, no matter if you're swing trading, day trading, or building a big portfolio. You can't have fear, and you've got to control the emotions. And the quicker you're able to do that, the quicker someone's going to see more consistent win rates.
Yeah, yeah, and, and I mean, that is a really really great point. Okay, moving on to the next question. Is it a good idea to, and I was taking a look at some of your posts, and you were talking about some of the teachers out there, right? I've seen
Yep.
some of your posts, yeah, on LinkedIn, yeah, and you were talking about the about I mean, and you're going right just after them, right? You're just you're like it is very important that first of all you have to see whether that person is actually trading by himself or not. There are a lot of teachers out there who haven't taken even one single trade, and they will never be
Yep.
able to feel. They will never be able to feel those emotions, and those downs, and that that urge to a trade. It's a different one.
Absolutely. So that's a common thing that I started seeing was there's all these fake teachers out there that they may understand trading theory, or so they think, but they've never truly placed a trade. So they have no idea what it really is like when you're placing the trade, all the emotions that are going through. Trading on paper is easy if you're using a simulation account, but it's way more difficult when you start putting real money on the line. The emotions become real. The losses become real. The wins become real. And so I did start attacking those guys on social media. And one thing that I always saw is these teachers who actually have quite a bit of followers will post about how much they win. And they'll post like a cropped screen grab of their profits. But it's 99% of the time a simulation account. So I advise anybody looking for a trading teacher out there to get proof of success from these guys. A lot of them, what they do, they're failed traders that are trying to make money from new traders to pay them a subscription fee to learn. And then those traders, and they think they're getting a good education by a real trader, and the truth is they're just not. So you gotta get the credibility from these guys. Get a brokerage statement. Get a real picture or something that actually is showing that there's success over a long period of time frame.
That is one of the important, things that, it's not about becoming successful in a week or in a month. It has to be at least over a year. That's that's what you will be able to actually see that whether that person is trading consistently and how much you know they have made in terms of percentages.
Exactly. They
Yeah,
gotta have a big sample size, right?
yeah, and just continue speaking on this idea. What do you think? Like you are trading into the market from a good amount of time and you are profitable. So, what do you think? Like, what are the places on your experience? What are some of the places where people can go and find some real stuff to learn or to get some idea about trading? Maybe on social
So
media or. Mhm.
it's a great question because there's a lot of BS out there on what's real, what's not. If you're looking for a real trading community, if you're able to decipher through the BS, Twitter is going to have the biggest following of actual real traders. Now, there's a lot of BS on there as well, but you'll have the biggest group of the real guys on there as well. Other than that, it depends on what you want to learn. If you're trying to learn, say, options, there's a website out there called Tasty Trade. And Tasty Trade is one of the websites I used initially to learn option trading, and they're the real deal.
Yes.
Anybody that's really charging for their, if anybody is charging like a monthly fee for stock picks and things like that, that's the red flag that they're not real. The real guys that are making big money are not then going out and selling a service for $40 a month, right? They already make enough money. They don't need to go do that. So I would also say books. There's actually a lot of good books out there, and it depends on what you want to learn to determine which
Yeah.
book is actually appropriate. But you can trust a lot of those books. And so I would say those are always good places. And also, the way I taught a lot of people is when I was working at a brokerage, I got to talk with a lot of clients, and so clients called in all the time, and that's how they were learning because they were calling licensed brokers on the active trading team to figure out how to learn. So I would say talking to real people that are truly successful can
Yeah.
really up your game quite a bit. But there's a lot of
Yeah.
deciphering you have to do on what's BS.
Yeah, and that's one of the it is a very very important aspect that if somebody is starting out, they are not even aware where they should go and take a look at the information and believe which is real and what's real, what's not. So yeah, I mean definitely if you are starting out, definitely you should be checking a lot of things before making a decision to work with somebody Of course, there are a lot of successful traders out there, and a lot of them, they are also out to, provide and pass the information and pass the knowledge.
Mhm.
You know, it's about, finding the right person and just cutting out your learning curve. Because sometimes, if the learning curve is so much big that people will they will start to lose momentum. They will start to feel demotivated that maybe everybody else is talking about it, and maybe you just cannot make money in the market. But that's not true. You are an example. I've been trading from such a long time, and this is one thing that we can pass, that you can absolutely make money from trading. You can make consistent, you know, profits from, where you can support yourself financially, and you can, build a good account, you know. So there's no doubt into that, So this is one thing that I want to make it very clear for new traders, that just don't feel demotivated. The the money and the profit, you can do it. You can do it. You just have to find the right person. If you if you want to make it fast, or if you have the patience, and if you have enough capital to burn, and you can still continue learning and continue working, but the success is there. What do you think?
It's it's there. I think everyone can find success with trading. Now, I will say majority of people will try it. They'll start trading and they'll fall into that hole that you mentioned, where they build a little bit of momentum, but then all of a sudden, it's like drinking from a fire hose. There's too much information out there. They don't know what they need to learn in order to get better. So one thing that I recommend to new traders, because I do consult quite a bit of new traders nowadays, is I want to figure out first what a trader's goal is. They need to figure out for themselves, what do they want to get out of trading? Are they doing this as a side hustle? Are they building a long-term portfolio? Are they wanting to eventually be a professional? Do they like
Yeah.
trading stocks? Do they like trading options? You got to figure out what you want to trade, what your end goal is with trading, and then once you have those answers, you can dig into certain niches that you need to go in order to boost up your knowledge and become better. But you do got to figure out a path that you want to go down before you can go down the path. Otherwise, you lose momentum and you don't want to trade anymore, and you just give it up and you say, "Oh, the market's rigged. I can't do it."
Yeah, yeah, so true. So another point, that you have to be clear in terms of your goals and how much time you want to put in your trading, and what are your expectations? What are you actually expecting? And are you ready to put in those, that time and those efforts to be successful? So that's a really great point there. Okay, Mark, let's move on. And you have tried covering that a little bit, as you were saying that you are taking less caffeine. But coming back to the yeah, I mean, coming back to the habits and the discipline, you know, what are some of the, like, the mental, physical habits, and just day-to-day discipline? Because I think it is very, very important. I mean, I noticed it, like, from my own personal life. But what's your opinion? What kind of mental habits a particular trader will need, in terms of, like, anything? If they have a habit of, I don't know, maybe drinking, and I'm not against anything at all. I just want to see your opinion.
Right. I'll start with the physical one. I would say the biggest thing is you need to get good night's sleep. If you don't have a good night's sleep, you're not going to be able to mentally focus. And focus is the most important thing when trading. If you're not focused, you're not going to make good trades. You're going to miss things. You might not maximize your profits. You might set a bad stop loss. You're just not in the right mindset, I guess, with it. So
Yeah.
sleep, super important. Other than that, I would say you have to be on a specific schedule. There's some people that only trade the first 2 hours of the day because they know they can only focus for 2 hours at a time. So they know themselves so well that they ensure that every day they're in front of their computer at, the market open for the first 2 hours, and they're disciplined like that.
Yeah.
Another thing that I do that really kind of transformed my trading is I'm big into Zen and meditation. And I love that stuff because my mind normally is always racing. You have to have I like to say you want to trade with no thought. And by no thought, I mean no fear. And the way to limit the fear is being able to control your thoughts. And you can practice that by doing meditation. And that really worked well for me. And then I exercise every day as soon as I'm done trading. As soon as I am done and I log out of my computer, I go for a 4-mile run in the Texas heat. And today it's 103 outside, so it's pretty hot. And that kind of resets my mind. And I only trade 8:30. I'm in Central Time over here, so I trade 8:30 a.m. to 11 a.m. And then I take a mental break for 2 hours. And then I get back on the computer at 1, and I trade till 3. Because I can't focus 6.5 hours the whole day. It's too much for me. And so I think knowing yourself and how you operate is crucial to being able to find success. And I do want to add that there's no one-size-fits-all routine for anybody. It's got to be built on how you personally operate, and that's when you'll start seeing a lot more consistency.
Yeah. And there we go. I mean, that was the point of this whole conversation. That you need to sit down and you need to meditate a little bit. I mean, I do it almost 20 to 30 minutes every day. That's my routine.
Oh, I love that.
That helps you. Yeah. I mean, that's where you build your focus. That's where you build your patience. That's where you are sharp mentally, and you have that clear direction that how your setups, will look like, what you're going to trade, again, and what will be your targets, entries, exits, and everything. So I mean, that's a very very important point, and I just cannot push that point, much more than what you said. I mean, it's one of the most important things, and of course, I mean, if you are also mentioning that and you are successful, then it is actually important, right? So definitely, traders have to keep a check on that part. Okay, moving on. It's I was looking forward to separate this next question from the whole conversation because I think it is the most important aspect of trading, and I would like to hear from you. What do you think about this? Uh, what's your philosophy towards losses and the risk management? What do you think? How much significance the risk management holds in the whole trading process?
I think it's crucial. One, you're going to lose. Nobody wins all their trades. There's nobody that has 100% win rate. A good trader that's day trading or a scalper like me, a top tier trader would probably be around a 55% win rate, right? They're winning slightly more often than they're losing. But the risk assessment part is what is crucial to actually winning. You can win more trades than you lose, but still lose money. So you have to be able to basically always target an optimal risk-reward ratio for how much you're wagering. For simplicity, all the books that people are going to read tell you to go for a 1 to 2 risk-reward ratio. You risk one to
Yeah.
win two. If you do that and
Mhm.
you win more than 50% of the time, you're successful. You will always have make money in the long run. But if
Yeah.
that's a 1-to-1 risk to reward ratio, you have to have a win rate that's significantly higher. You have to get up to about 75%, 80% for you to be seeing consistent money coming in. So
Absolutely.
identifying when that risk reward is the most optimal and always ensuring that it's greater than, one, well then it's a lot easier to win more than you lose. But if you are going for a really low risk to reward ratio, then you need to have the idea in your head that you need to have a much higher win rate. And then vice versa. If you have a really high risk to reward ratio, say like a 1-to-4, well then you can win a lot less and still make money over the course of the long run. So you just got to have an idea of how much you're risking to get that reward and then be able to repeat that process over and over and over.
Right. Yeah. And that is really important, and it's a very, very good point that when you are entering into the market and you are a new trader, or even if you are just a struggling trader, you are just trying to figure things out, it is very, very important that you pay attention to your winning rate, your winning ratio, and you pay attention to your risk reward, how much you are risking per trade, and how much you are making per trade. That's that's a good point to start with, in terms of doing the calculations and writing things down. That's a good area to look at.
Exactly. And I wanted to kind of expand a little bit because you said, how do you deal with losses or what do you do with the losses? Losses should always be treated as a learning experience. That's why I like to say journaling is good. Screenshotting your trades and looking back at them a little bit later on is good because you need to figure out, okay, was the loss because the market just moved not in my favor and it was actually a good trade and that was just the risk that I put up and I lost and it's okay, I can move on? Or was that loss something that you made an error on? Maybe it was a bad entry. Maybe you FOMO'd in. Maybe you just weren't thinking and you clicked a random button and whatnot and ends up turning into a losing trade. So being able to look at your losses, not have them eat you up and make you super sad, but being able to look at them with a silver lining and look at them in a positive viewpoint so you can learn from every single loss. And that way you speed up your learning way faster if you do that. Because you'll see why you're making mistakes and then be able to identify how to prevent that in the future.
That is so true. I mean, and that will take some discipline. Going back to that previous point, as you said, writing it down, taking a look at it, how much you have made, how much you have lost, how many trades you have taken, and just just keeping a diary or something or a notepad, and you can just if you can write things down. I mean, that's a really really great idea, and it is. I can tell from my experience, I started to change in my trading the moment I started writing things down. When I started and actually started analyzing everything, that was the point for me uh, to correct, remove the mistakes and optimize the strategy. So that's really really important. Okay, I mean that's really great, and hopefully some of our new traders, they will definitely pick this point. Uh, okay, Mark, we are just running out of time, and I really appreciate that you agreed to come on the podcast. So just to wrap things here, uh, what suggestions or advice do you have, like 3 to 5 important points which are super necessary? You have covered a lot of stuff during the conversation, but just to wrap things, 3 to 5 important points. If a new trader is listening to us right now, what are those 3 to 5 points if they will keep a check on those points, it will speed up their learning curve, and it will take them to the promised land very fast. That's the word.
I love that. I love it. Yeah,
Yeah.
absolutely. I can definitely come up with 5 right now. Number 1, there's no one-size-fits-all approach to trading. So just know that what works for somebody else may not work for you. It's going to boil down to your own style and personality. Number 2, risk management. Risk management is really easy to mess up. It's really easy to not be disciplined on it, and before you know it, your margin calls, you blew up your account, and you're not going to be able to trade. Always live to trade another day, right? You don't want to lose all your money. Number 3,
Yeah.
as you're new, your number 1 focus should be to preserve your capital. You want to make sure that your education is as cheap as possible. So start small. No matter how much money you have to start small until you build up that muscle memory so you can scale your strategy bigger.
Yeah.
Number 4 is you will not get rich. Trade. The chances are slim that you'll get rich, so get that idea out of your head. And you will be a lot happier down the road. And then lastly, you just gotta have fun with it, right? Trading is fun. Good trading is not sexy, but it is still fun. And I always say the goal should be to just continue hitting single runs, right, or single base hits, and keeping those bases loaded, because those small wins will add up quick, and your confidence will build up quick, and that's what'll take you to the next level. And then the last thing, write everything down. Write what you're doing, write what you're feeling, write what your trade is, write why you did it, and then analyze that a few hours after you're done trading. Don't analyze it immediately. Analyze it a few hours. Give your brain a break. Then analyze everything and find where you were going wrong.
That is so great, so true, and that's a great place to end the conversation. And hopefully, if people will pay, and new traders, if they will pay some attention to the whole conversation, they will be able to see which are the most important areas where they need to work and improve. Okay, Mark, thanks a lot for coming on the podcast, sharing your knowledge and your experience. I'm truly thankful, and I really appreciate coming on the podcast.
Absolutely, Tom. Thanks for having me, and feel free to reach out anytime. It was a lot of fun.
Great, Mark. We'll keep in touch in the near future.
Perfect. Well, sounds good, and I hope you have a great rest of your day.
You too, Mark. Thank you again.
Take care.
Thanks for listening, guys, and I truly appreciate it, and looking forward to see you in the upcoming episode with more interesting conversations, insights, tips, strategies, and ideas. Stay tuned to the podcast on Spotify, YouTube, iTunes. Please like, share, subscribe, comment, and if you can leave 5-star ratings on iTunes, that will be really great, because we will be able to reach more new traders, upcoming traders. Thank you.